Welcome to the MasterMINED Club, your ultimate gateway into the world of Bitcoin mining. Whether you're just starting out or looking to scale your operations, our vibrant community of like-minded enthusiasts is here to support you every step of the way. Join us for weekly sessions led by industry pros, where you'll exchange ideas, brainstorm strategies, and stay motivated on your mining journey. From heat management to site optimization, our monthly deep dives cover the technical know-how you need to succeed. And with access to our entire back catalog, you'll never miss a beat. But that's not all. Our members enjoy exclusive one-on-one sessions with veteran miners, plus direct access to special pre-sales and insider opportunities at Bitcoin Mining World. Ready to take your mining to the next level? Join the MasterMINED Club today and secure your spot in the future of Bitcoin mining. Visit bitcoinminingworld.com or scan the QR code now. And now back to the show.
What is up, guys? Bitcoiners, welcome to the October Mastermind Deep Dive. We are here today with Reagan. Reagan, thank you for being here today. We really appreciate it.
Thanks for having me, Trevor.
Yeah, we're excited. You know, Bitcoiners don't really do a whole lot when it comes to the tax side of things, but today is going to be a really great webinar for everybody to just learn the wider implications around building a tax strategy for their Bitcoin mining operations. Really, I'm not going to waste any time here. I'm going to let you get straight into it. But real quick, I want to tell everybody this month is the tax implications for Bitcoin mining. But next month for our November's webinar, we'll actually have Kevin from Formidable Capital come on the webinar, and he'll be doing a presentation on getting financing, getting funding for your Bitcoin mining operation or Bitcoin business. So make sure that you stay tuned for that. Scan this QR code, go to the website, and get signed up for that in advance. But yeah, so Reagan, I'm just going to basically pass it on over to you. I'm going to head off to the green room and let you do your thing. Again, thank you so much for being here today. We appreciate your time.
Awesome. Thank you so much. Okay, so before I kick things off here, brief intro on me. I'm a CPA by trade. I've been with a company called TaxBit for the past 3 years. TaxBit was originally founded as a consumer platform for individual taxpayers built by CPAs and attorneys, and now we are entirely enterprise focused. So my background prior to my time at TaxBit was all things financial reporting, started my career in public accounting, and now have been in the crypto space professionally for the past 3 years, building solutions for all things tax, accounting, and reporting for the crypto space. So in today's session, we're going to talk through a few things here. We're going to talk through what matters as you track your mining rewards. We'll talk through different accounting and reporting considerations. And when I use the language accounting and reporting, I know as this session was introduced, the language around tax was used. It's all similar in the sense that there are calculations necessary for all things accounting and reporting. So when I reference accounting and reporting, you can think of tax, reporting, accounting. They all fall under a similar blanket here in terms of operational considerations. Next, I'll talk through a real world example, some of what I've seen in my time at TaxBit and in the space as a CPA, and then also call out some actual large public company financial reports that are relevant for the discussion as we talk through reporting. And as I'm going through all the content today, feel free to drop questions in the chat. I'll also be saving time at the end for some Q&A. So we'll start here with what matters as you track your mining rewards. If we back up a little bit and think about the full context around mining activity and what are the downstream implications when you think of tax and accounting and financial reporting. I want to back up and recognize, though, that this is not all, the listeners today are not all from a company or enterprise perspective. I understand that we might have some individuals on the phone here. So just know that these concepts are relevant for individuals as well as enterprises. Some of the content that I will be sharing is more relevant and specific for the enterprise use case as I talk through the most up-to-date accounting guidance. But these concepts that I'll talk through, especially in the beginning, are relevant for an individual miner as well. So to kind of go through and highlight what is important within the context of being prepared for any sort of reporting that you need to do, whether that's as an individual taxpayer or a company who has financial reporting obligations. And that is relevant for public and private companies. So first and foremost, tracking all the transaction data. So if you think about a miner, some of the clients that I've worked with, they have maybe 5 different data sources, and all of that transaction activity needs to be tracked in one place. And that also needs to be tracked in one standard format. So that's the first thing to consider as you think about whether you're an individual or an enterprise, is tracking all of that data in real time so that, you know, when you have some sort of reporting obligation at the end of the year or at the end of the month, all of that transaction data is in one place and ready to be used for whatever calculations need to be done. Inventory balances and tracking is also an important consideration. That information should be accessible in real time. If you have, you know, only one wallet, for example, tracking an inventory balance might be simpler. It's that concept of having multiple wallets, maybe multiple sources for on-ramp, off-ramp activity, that inventory balances in a consolidated format that can be a little more time consuming. The third thing here to consider is tracking the cost basis as well as the fair value of all of that mining activity and activity beyond the mining rewards. So we'll get into this in a couple of slides here, but tracking the cost basis, so understanding what the lot is acquired for when you receive that reward, as well as what is the fair value over time, whether that's for assets held or disposed of at a later date. That information should be tracked at the individual lot level. This fourth item here is more relevant for companies who have journal entries and an ERP solution to maintain with the most up-to-date information. The journal entry concept is more relevant, but we won't spend too much time on that one. And then in general, just all transaction level detail in the event of an audit at a future date should be retained for the purpose of audit readiness. So if we back up in general, what is a taxable event? So anytime I acquire any sort of mining reward, for example, or maybe I buy BTC, maybe there's a swap that occurs, maybe I receive some sort of income in the form of crypto. That is what we consider an acquisition event. If I sell or dispose of that crypto at a later date, that is always going to be more than likely a taxable event. So if I sell, trade, I have a crypto fee, all of those events are considered taxable events, whether you're an individual taxpayer or you're a company, maintaining multiple different data sources. Maybe you're paying expenses in crypto. Maybe you are selling some of that. We work with a handful of companies who simply buy or, they receive mining rewards. And the only time there are technically disposals is in the form of a crypto fee. That should technically be treated as a taxable event, which results in the need for a calculation. What is that realized gain loss at the time of the disposal? The transactions that are the most relevant for Bitcoin miners, though, are these mining rewards transfers. Maybe you receive the mining reward in one wallet, and then you transfer it to maybe Coinbase or some other exchange where you have the ability to go on or off ramp. The other relevant transaction here is those transaction fees that I was referencing. So again, this is all relevant whether you're an individual taxpayer or you're an enterprise with a mining business. Maybe mining is your entire business. We work with Marathon, Riot, some of the largest miners in the space. So we have a good understanding of what that looks like from an operational perspective. And it's the same concept when you think about what needs to be tracked for an individual taxpayer as well. So I want to call out here, again, relevant for the enterprise use case, there is required reporting for public and private companies. And I use MicroStrategy here as an example because they have been a leader in terms of, in their financial statements that they're filing publicly, they have been presenting digital assets in their financial statements for years now. So I wanted to call this out as a real world example of what does this actually look like in the context of financial reporting and from the lens of a company who is holding crypto. So I have another example at the end of this presentation that is specific to a miner, but I do want to call out here that companies have been doing this type of financial reporting for years now, and it's also relevant for individual taxpayers as we continue to see more and more regulatory clarity and guidance from different governing bodies. So I just mentioned financial reporting here, and I do want to call out for the enterprise use case that in the past year, we've seen advances in terms of guidance clarity. So what does that even mean? Previously, there was maybe some confusing accounting guidance as it relates to crypto assets held. And as of in the past year, there's now more clarity around these crypto assets should be recorded on the balance sheet at fair value. So this is more user-friendly for companies. It is more reflective of the economic reality of these crypto assets held. So for a Bitcoin miner, for example, this guidance should be fairly straightforward. I receive the rewards. I need to track what the price was at the time that I received that asset. And then from there, I need to make sure I'm tracking my inventory held. And then in my financial reporting, I need to record that BTC held at the fair value. So if you're, mining Bitcoin and then holding that Bitcoin, what needs to be done there is the record in change of fair value. So for example, I received Bitcoin for $40,000 on one day. It's worth $60,000 3 months later. I need to record a gain on that change in fair value. So that's an important thing to note in terms of what is the most up-to-date reporting guidance for companies mining Bitcoin. And then for the individual use case, until I'm disposing of that Bitcoin, there's not the same need to record that change in fair value. But I do need to track the activity so that if I dispose of it at a later date, whether that's through a sell or a swap, I can track this was my acquisition price, and then I need to be able to track the change in fair value over time, whether I'm an individual or a company. So I don't want to go too deep into this. Again, if there are any individuals tuning in from a company, happy to talk through this more in detail, but I do want to call out in the past year, there has been updates to the accounting guidance. So the impacts here, I just talked through some of these in that last slide, but the important thing to take away here is that tracking the price of the Bitcoin over time is relevant and necessary, whether you're an individual or an enterprise. And for enterprises specifically, there are specific disclosures that are now required. So for example, I need to present in my financial reporting, what is the inventory held, what is the fair value of that inventory held, and then what is the cost basis. And so all of these details that I'm talking through, they are relevant for individuals as well. So whether you're an individual who could be audited at a future date or an enterprise, these are all really critical details to retain information on in the event of an audit and for relevant calculations, whether you're doing the calculations yourself or you're hiring a third party to help you with those calculations. So some of the common challenges that we see related to getting to these calculations and this reporting is there's a few few key areas that we've noticed are challenges from an operational perspective for miners specifically. And we've touched on these briefly here, but I'll go through these 4 categories of challenges. One is the concept of data aggregation, compliance with different reporting requirements. And again, I reference GAAP here, which is relevant for enterprises, but for individuals, we see the same challenges in terms of complying with, what are the relevant calculations, and making sure you have all that detail in advance. Period end processing, what I mean by that is month-end close, quarter-end close. There are different reports that need to be done for internal and external stakeholders. And then the concept of auditability. So a lot of the time, especially for individual taxpayers, what we've seen is, individuals do all of this mining or trading activity, and then they get audited a couple of years down the road, and it's difficult to then access the information after the fact. So a challenge that is important to highlight now is that whether or not you're preparing for an audit in the near future, being prepared with having this information documented is absolutely critical. So the first common operational challenge here is this concept of data aggregation. And what I mean by that is maybe I have 10 Bitcoin wallets and I'm receiving rewards in a few of them, and then I'm transferring those rewards to another account, making sure that, the flow of funds is crystal clear for, your reporting purposes, and also just understanding the flow of funds so that in the future, when you do need to be organized for whatever reporting or audit requirements you have, that flow of funds is clearly understood and documented by the entire team. Another challenge related to this data aggregation is the concept of standardizing that data. So if you were to export data from Luxor or Foundry, or even for your Bitcoin wallets, and then put that into a spreadsheet, which is what we see a lot of as we start to work with different companies, the data is formatted different across all of these different sources. So understanding that in advance as well, it's almost taking people in the accounting and finance profession back many years, because people are doing all this work in spreadsheets again. So this is a concept to be aware of and to be prepared for. I've touched a little bit on the updated GAAP guidance as it relates to reporting for private and public companies, but just being aware of the concept that the guidance is changing, and it's changed over the past year and will continue to change over time. Just understanding that these accounting standards will continue to evolve, whether that's in the US or international. These standards will evolve, and whether you're a public or private company, the intention, with these different required disclosures is to make the activity more digestible and accessible for internal and external stakeholders. So previously, for example, there was not necessarily a requirement to say, here's exactly how you should present this information in your 10Q, for example. And now there's more clarity to say, break out the inventory balance, break out the cost basis and the fair value, so that there's better transparency and visibility in that reporting. This is related to the data aggregation concept that I already talked through. There are naturally time constraints related to tracking all of this information. So tracking all of the acquisition events, making sure that you have record of all of those mining rewards, and then tracking where they are transferred to, how long have they been held for. There are naturally time constraints related to tracking all of that information. And it's interesting because some of the companies that we work with, they have millions of transactions that they're tracking, and it's all being done in a manual spreadsheet. And so preparing for the time that could be spent, again, whether you're an individual or a company, preparing for the time that will need to be spent is another important consideration here. And again, this is relevant for miners. It's relevant for any company holding digital assets. And then finally, we've talked through this already, but making sure that documentation is retained for all the transaction level details. So all the way down to transaction ID, how is the asset being priced? A couple of the large public companies that we work with, there is increased scrutiny around how the transaction data is being priced. And what I mean by that is, okay, maybe I receive the rewards yesterday, but I technically don't see it in my wallet until today. I need to understand and have a path forward for how am I going to price this in a methodical way that's representative of the fact that I received the reward yesterday, technically. So understanding some of these details and then having documentation around what is my process for how I'm tracking and reporting on this activity is critical for an auditor. We're actually in the process of talking with a couple of our clients' auditors right now as we speak, and they have certain expectations around the level of detail that's going into how the mining rewards are being priced. So these are active conversations that we're having, and it's important to think about these things in advance. So I'm going to talk through a real world example of this mining and reporting. Where is this actually showing up in reporting? And then I want to open up for some Q&A here. So one real world example, Marathon is a client of ours, and they are a good example of, financial reporting. So I've actually screenshotted some of their disclosures from their 10Q from this year. And I want to call out some of the concepts that I've talked through where that's showing up in practice here. So this is an example of a public miner. This is their most recent financial reporting. And a few things I'll call out on here that you can see that are connected to some of the concepts I've talked through is the concept of mining rewards being broken out in terms of revenue and income. That's a critical item to be presenting in your financial statements. This concept of significant holdings. So what is the quantity of Bitcoin held as of the end of the period? What is the cost basis and fair value? These numbers are, made up of all of those individual lots acquired when the mining occurred, and then tracking that cost basis over time for all of those lots held. So different miners that we work with, they have different strategies. Many of them mine the Bitcoin and hold. Others pay expenses with that Bitcoin. Others, have other sorts of treasury strategies. But this is a good example of all of those individual transactions being tracked and then presented in the same way that you'd see any other, public company. So these are really important concepts to be aware of. And then after this is all published, we're actually now in conversation with their auditors to make sure that the way we're pricing these assets is sufficient for them to pass an audit. So this is just one example of a client that we work with and how their information is then showing up in their financial reporting. And then another real world example that I want to share here. And again, I am representing TaxBit here. So naturally, I'm happy to talk about what our solution does in the context of all of this financial reporting. But I do want to call out here before I open up for Q&A that there are solutions that exist that can save companies and also individuals time with some of this tracking. So in terms of the considerations I was describing around a month-end close, the reporting that is necessary, there are solutions that exist to save companies time with all of that tracking and reporting. So before I talk about TaxBit, I do want to open up for any questions. Before I talk anymore, are there any questions? I'm jumping back over to the chat here, but I'm happy to talk through any concepts that folks are interested in.
First off, I just want to say thank you, Reagan, for that presentation. I think that's very enlightening. It helps us kind of understand how we need to move forward as we prepare our taxes as Bitcoin miners. I'll just start reading off the questions from the very top, and then you can just answer them. We'll show it on screen here. But is there any accounting software most ready for Bitcoin mining companies?
Yeah, there are great solutions that exist in the market today. So there are platforms for individual taxpayers that exist. From an enterprise perspective, TaxBit is the clear leader in this space in terms of accounting software for Bitcoin mining companies. We work with a majority of the largest miners in the space. And it's definitely a focus of ours to serve the mining space well. So I'm happy to talk through what that looks like. I will drop my email in the chat, but TaxBit is an accounting software that's focused on serving the mining space well.
Awesome. Well, thank you for that. So our next question is from Ron. Ron is asking, how do you deal with dozens of different coins with dozens of different transactions per day when you are an individual miner or a small company?
Yeah, that's a great question. And that question is exactly why a solution like TaxBit exists, because when you have maybe 10 transactions a month, whether you're an individual or you're a company, that scale of transaction volume is manageable. But when you get into, hundreds, thousands, millions of transactions, whether that's on a monthly or even an annual basis, it becomes unmanageable. And so a solution like TaxBit directly integrates with the different sources, whether that's exchanges or wallet integrations. That's where a solution like TaxBit can be helpful in terms of automating that data aggregation and then summarizing it in a way that's meaningful for your business reporting.
Perfect. That's very, I'm going to start using that. So this one's the next one. Mining income needs to be recorded as ordinary income at the time the reward is received, right? Not necessarily the value at which it is sold for. So Dennis has recorded as ordinary income and then capital gains and losses from that basis. Someone else shared this is incorrect and should be reported as the value if and when the exchange for USD only.
Yeah, so recording that income is important. That's correct. And then there's only a taxable event when you dispose of that Bitcoin, whether that's I'm selling Bitcoin for USD or I'm swapping it out for another token.
Okay. So, Dennis asks, should you use a pool that's based solely in the US?
That maybe is less complicated, but it's really personal preference on that one. I wouldn't say there's any better or worse situation. You might just have complications outside of the US. But again, in terms of the crypto space, it's all very global. So a lot of the activity we're seeing is becoming more and more international. So I wouldn't say there's any should or shouldn't in terms of the answer to that question.
Okay. So the next question is, how often should you revisit FMV? Monthly, is that an adjustment considered general revenue or a gain on assets?
Yeah, that's a great question. So what the guidance explicitly says, as often as you're doing your financial reporting, you should be evaluating what is the fair value of my assets held. So for example, and I would say in practice, doing that monthly might be a nice to have if you have a solution that can provide you with that insight automatically. But if you are doing quarterly reporting, for example, and whether that's, again, public or private company, in practice, doing it quarterly might be the most realistic. And then you would say, what is the fair value of my assets held as of the end of Q2? And then compare that to the fair value of my assets held as of the end of Q3. And then the difference there should be recognized as a realized gain or loss.
Perfect. So the next question is from Darren. How do you best educate an existing CPA that has been excellent but doesn't have miner clients other than himself? She has worked off TaxBit reports for exchanges, wallets, and rewards, but I'm scaling up to a larger mining operation.
Yeah, that's a great question. In terms of educating an existing CPA, what I will say is most CPAs in the space are newer to the crypto space. So compared to other industries, we're all in a similar playing field in terms of getting up to speed on the most relevant guidance. And so what I would say in terms of getting an existing CPA up to speed is you can't really replace experience working with these clients. And look, that example I showed on the screen here, it's a simple yet effective way to say, this is what the final output looks like. And then backing into how do you actually get there is a really helpful exercise, in my opinion. Prior to my time at TaxBit, I had no professional crypto experience as a CPA. And taking that output, my previous professional background was in working in big pharma and working on the consolidated financial reporting team. So I was living in the 10Q and the 10K, and taking that end result and then doing the exercise of backing into what are the details that I needed to actually get there and reconcile with those final numbers. That's a helpful exercise. And then for miners specific, I would say understanding what is the typical flow of funds for a Bitcoin miner. Understanding strategy, understanding, how are they tracking it today is really important.
Awesome. So if an individual needed to calculate basis on mining rewards, what is the simplest way of doing that? We don't need financial reports, accounting like a corporation.
Yeah, that's a great question. So similar to a corporation, whether you're, for an individual, that is where the concept of tracking and having documentation around the actual, it sounds silly, but keeping track of the individual transactions, whether that's in a spreadsheet or there's some really solid platforms that still exist for individual taxpayers. So I would encourage using one of those so that you can add your Bitcoin wallet, for example. The solutions will aggregate all that information and should be tracking that cost basis for you. If you don't want to use a solution, having an export of all your transaction data and basically what you need to do there is say, what is the price of my mining rewards received at the time that I received the reward? So it's as simple as what was the price of Bitcoin on this day, and then multiplying that by the quantity. That will be your acquisition price that you need to keep track of.
That's awesome. I just want to say this is great information that everybody's getting. I hope all the viewers are enjoying this because I'm personally enjoying this. Thank you, Reagan. So the next question, Scott asks, can I mine Bitcoin directly to my IRA?
That question I would say is out of scope of my area of expertise.
Okay, that's perfectly fine. So the next question we have is from Dennis again. What is the size of the company you consider your best client?
In terms of size of the company doesn't necessarily matter. When you have a solution that scales well with large companies, I'll back up a little bit. We've built a solution to, serve companies with millions and millions of transactions. So it's not the case that that's better or worse, but what that means for us and for anyone listening is whether you have 100 transactions a month or millions a month, a solution like TaxBit will work for you. And the most important thing there is that we can scale with your business. So even if you have lower transaction volumes today, if and when you grow over time, a solution like TaxBit is ready to scale with you.
Yeah, that kind of ties into this question from Ron, which is how small or large does a sole proprietor LLC have to be for TaxBit to be cost effective for them? I think that kind of just falls straight in line with what you just answered.
And I think, that's an important question because it's I talked about different operational considerations. And the one thing I touched briefly on is understanding whether you're a company or an individual considering using a solution or a third party is keep inventory of how much time is being spent on a monthly, even annual basis, because we've spoken with companies who have a team of 5 doing everything manually, and it's taking dozens of hours every single month. So it really depends on, one, how knowledgeable and efficient is your team. Maybe you have someone really efficient that can do it all, and it's a simpler use case. That scenario is completely different than a company with a team of people doing everything manually every month. So it really depends on what is it costing you today to do it all manually. That's the first step in understanding, is it cost effective to use a solution? Yeah.
Perfect. So this question is from Jacob, and he's asking, so the mining rewards are recorded as income when mined, but a reward isn't a taxable event until it is sold for USD, or is used to purchase something?
Yeah. So so in terms of taxable event, what I was describing is that necessary realized gain or loss, which is the critical calculation for an individual taxpayer. So correct. Until it's disposed of for USD, that is the really important transaction event to keep track of and be aware of as an individual taxpayer.
Perfect. So our next question is from Crypto Mikkel. Would being on an SOC compliant pool benefit like Foundry?
Could you elaborate what you mean by so when you say SOC compliant? I'll answer that first with kind of a general statement, but I'd love if you could add a follow-up question here about just being a little more descriptive. SOC compliance in this space is extremely critical for whether you're using a solution like TaxBit or really any platform that you're using. I'm actually really glad that this question is brought up, because the concept of audit, not only from the lens of I'm preparing to be audited, but think about all the solutions that we are all using now in the space. It's almost like solution overload right now happening in the crypto space, because everything's brand new and there's this wave of financial transformation happening beyond crypto. This concept of compliance with the solutions that we're using is critical. So whether you're using TaxBit, Foundry, like these are the questions we should be digging into with any solutions that we're using. And that's an important thing that we look to. We use different pricing vendors, for example, and making sure that they are SOC compliant and making sure they're compliant with whatever relevant controls we think are important. These are questions we should be looking at. But like SOC compliance is top of mind for us, and it should be for anyone using any type of solution.
Awesome. Yeah. Well, if Crypto Mikkel wants to ask a follow-up question into that, I think he's just mainly curious if using a SOC compliant pool like Foundry is more beneficial for the user than using a pool like Ocean that's non-SOC compliant.
I would say yes, because the thing is right now with the crypto space is we are relying on a lot of platforms to tell us what is true. If you think about tracking even something as simple as what is my inventory balance, we are relying on solutions to tell us what that is, which is part of why tracking records independently is really important. But I've seen a number of use cases where individuals use different platforms and they are not able to reconcile with whatever balance it's presenting them. So I would say as you're using different solutions, definitely keep an eye out for compliance and other things that indicate that they are a secure environment and they're doing their diligence internally.
Cool. So we're getting down to our last couple of questions here, and then I've got a small announcement for everybody. Well, it's a big announcement, but anyways. So has TaxBit looked into using minor tax liabilities to reduce their energy and operational cost under tradable investment tax credits or production tax credits?
That's a good question. My answer to that is TaxBit is while we do, spend quite a bit of time doing thought leadership and staying up to date on the most relevant guidance and regulation, we are a solution provider. And so that type of question would be more of an advisory type of question that you'd want to consult with a service provider on. So let's say you work with like a Deloitte or a smaller outsourced CFO shop, they would be able to answer that question for you. And then you would use our solution to get to the relevant calculations. So
awesome. That provides a lot of clarity. So the next question by Dennis again is, so I've seen it's better to run mining in an S Corp via an LLC or a C Corp. Do you have any thoughts on this?
My answer is the same as what my answer was to that last question. I would consult with a third party on that type of advising question.
Okay. Yeah, not your area of expertise. So Crypto Mikkel came back in, and I'll just show this one real quick. So he's heard a mixed of answers as business standpoint. It seems to make you look better from an audit standpoint, and I think that you did provide a lot of clarity on that. Is it just provides a lot more clarity and perspective on what's happening and going on in the inner workings of your business.
Yeah, 100%.
All right, so we got time for 2 more questions. What is the best practices for segregating wallets for specific types of transactions, i.e. a wallet for rewards, another wallet to buy miners, another to pay for mining hosting clients, etc.?
Yeah, I love this question because these questions are so important because I've worked with companies who ask this question 3 years into operating and their wallet hygiene, if you will, is a mess. So these questions are so important to answer right up front. And I'm glad that you asked that. There's not one way that's better than another. It really depends on what is a meaningful way for me to present this information and these transactions in my reporting. So some people want to see this information segregated out by wallet. What I've seen with some of our more sophisticated clients is I have a dedicated wallets for receiving rewards. I have a dedicated wallet for where I transfer these rewards to. I would say segregating out the activity by transaction type is an extremely helpful an effective way to segregate out the activity. So those are important things and will make your life a lot easier if you think about right up front.
Yeah, I'm getting this overarching idea of just keeping all your documentation and everything, all your transactions in easy to find folders or wallets, as you could say, just so that it's clearly defined and it's easier for you to, coordinate everything at the end of the year.
Yep.
Okay. So our last question is from Jacob, and Jacob asks, can you please clarify guidance versus law? My understanding is there is no law that clearly says receiving a mining reward must be recorded as income for income tax purposes. When those rewards are sold or used to buy something, however, the law is more clear. Consider an artist who has spent money and time producing paintings, but hasn't sold them or bartered with them yet. The canvas, paint, studio rent, etc. are all like the mining equipment, electric bills. BTC is the painting.
Yeah. Good question. So guidance versus law. So right now I'll try to keep this simple. Right now, in terms of when I used the word guidance earlier in this presentation, I was referring to guidance related to financial reporting for private and public companies. In terms of law and what is required for individuals, that is when I was describing the concept of I mine Bitcoin and then I need to record and report on a realized gain or loss when I sell that, but if and when I sell that Bitcoin, that is more around this is required for an individual taxpayer. So that's actually an interesting question, because I did use the word guidance. So if you're coming from, I don't know if this question is coming from the individual taxpayer lens or the company lens, but I'm assuming it's coming from the individual lens, because the guidance terminology that I was using, you can completely ignore if this is coming from the individual taxpayer. But in terms of what is required, or law, if you will, that's where that concept of until I dispose of the asset, that is the relevant calculation that I need to be tracking.
Awesome.
Does that answer the question?
Yeah, that makes
Okay.
makes a lot of sense, and helps me, and I'm sure it helps Jacob as well, and the rest of our listeners. So that really does it for our webinar today. I have one little announcement to make before we close this out. But first, I want to say thank you so much, Reagan, and TaxBit, for coming on and presenting this information. This is some of the most valuable information that we as Bitcoin mining operators and just Bitcoiners in general can get in order to protect ourselves further down the line. And I think I speak for the individual community, is like, this stuff is not distributed very well. So we don't really have a strong understanding of how to go about building a tax strategy. So I think this is super helpful for us to manage our tax situation and our Bitcoin and really hold it for the long term, which is what the plan is.
Yeah. Thank you so much.
So guys, everybody who tuned into the webinar today, I want to say thank you to you as well. We have a special giveaway going on here at Bitcoin Mining World. We are giving away an Apollo 2, which is a space heater, a miner, and a node all in one. And if you guys want to be a part of that, I would say go to this website right here. We have an entry form. So for all people who want to win an Apollo 2 miner, go to that form, fill it out, and we will be giving away this miner on October 31st. So in just a few weeks, we're going to be giving that away, and you guys can have a chance to do it. So definitely take advantage of this and join or sign up for that form. But yeah, that was our webinar today, guys. This was an incredible event. October's webinar, Bitcoin mining and taxes with TaxBit and Reagan. Appreciate that so much. Next month, again, guys, we are doing financing and funding with Formidable Capital. Kevin will be coming on to do that for us. It's going to be a great conversation. And yeah, so with that, I would say, again, thank you, Reagan, and we will see everybody next month.
Welcome to the MasterMINED Club, your ultimate gateway into the world of Bitcoin mining. Whether you're just starting out or looking to scale your operations, our vibrant community of like-minded enthusiasts is here to support you every step of the way. Join us for weekly sessions led by industry pros, where you'll exchange ideas, brainstorm strategies, and stay motivated on your mining journey. From heat management to site optimization, our monthly deep dives cover the technical know-how you need to succeed. And with access to our entire back catalog, you'll never miss a beat. But that's not all. Our members enjoy exclusive one-on-one sessions with veteran miners, plus direct access to special pre-sales and insider opportunities at Bitcoin Mining World. Ready to take your mining to the next level? Join the MasterMINED Club today and secure your spot in the future of Bitcoin mining. Visit bitcoinminingworld.com or scan the QR code now. And now back to the show.